Hello everyone. Welcome to the Stock Minds web channel. The Canadian Imperial Bank of Commerce, CIBC, NYSE, CM, delivered another strong earnings quarter in Q2 2025, demonstrating both solid growth and value. With robust top-line expansion, reliable profitability, and attractive valuation metrics, CM continues to stand out as a top pick in the Canadian banking space. In this video, we will dive into CIBC recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Canadian Imperial Bank of Commerce. Founded in 1867, the Canadian Imperial Bank of Commerce, CIBC, is one of Canada's Big Five banks. Headquartered in Toronto, CIBC offers a full suite of banking services, including personal and commercial banking, wealth and asset management, capital markets, and U.S. segment operations. It serves over 11 million clients across Canada, the U.S., and international markets, leveraging its diverse divisions to deliver revenue growth and resilience across economic cycles. CIBC financial performance. In the second quarter of fiscal year 2025, which ended in April, Canadian Imperial Bank of Commerce, CM, delivered strong financial results, reflecting solid year-over-year growth. The bank reported revenue of $4.65 billion, marking a 13.44% increase from $4.1 billion in Q2 2024. Earnings per share, EPS, also rose significantly to $1.48, up 13.85% compared to $1.30 in the same quarter last year. On a trailing 12-month TTM basis, revenue reached $18.46 billion, representing a 17.07% increase from $15.77 billion in the previous year, while TTM EPS climbed 21.22% to $5.77 from $4.76. The bank maintained strong profitability with an operating margin of 40.53% and a net profit margin of 30.74%. Additionally, its return on assets stood at 0.72%, and return on equity reached an impressive 13.4%, underscoring its efficient capital utilization. Over the past 5 years, CIBC has been growing its revenue at a 12.7% CAGR and its net income at 18.4%, which is considered fast growth for a bank. CIBC Fiscal 2025 Financial Forecast. Looking ahead, analysts project continued momentum with forecasted revenue of $20.57 billion for full year 2025, a 12.7% increase from $18.25 billion in 2024. Non-GAAP EPS is also expected to rise to $5.97, up 13.14% from $5.28 last year. The average analyst price target is $69.32, with a consensus buy rating with potential downside minus 2.13%, probably because the stock is already up a lot over the past year and analysts are not raising the price target. The highest target price stands at $76.51, indicating potential for an 8.02% gain from current levels. CM stock price performance and valuation. At the time this video was created, the stock was trading at $70.83. Canadian Imperial Bank of Commerce, CM, has demonstrated impressive stock performance over the past year, with its share price rising 49.8%, significantly outperforming the S&P 500's 13.3% gain during the same period. Over a longer horizon, CM has also outpaced the broader market, delivering a 111.1% return over the past 5 years compared to the S&P 500's 97.8% increase. Beyond capital appreciation, the stock offers an attractive dividend yield of 3.86%, providing additional return for long-term investors. From a valuation perspective, CM remains reasonably priced. The current price-to-sales PS ratio on a trailing 12-month basis is 3.56, with a forward PS of 3.17. The non-GAAP price-to-earnings PE ratio stands at 12.01 TTM and forward PE of 11.68, which looks low. Based on Fiscal.ai data, if we look at the valuation over the past 5 years, the forward PS and forward PE are above the average. While considered above historical levels, CIBC's revenue and EPS are projected to grow at a double-digit rate, which makes the valuation still reasonable. CIBC growth potential. CIBC growth prospect remains robust, driven by several factors. 1. Digital transformation and AI innovation. CIBC has made significant investments in digital transformation and artificial intelligence that position it for accelerated growth. The bank launched CIBC AI, CAI, its proprietary generative AI platform, bank-wide in May 2025 after a successful pilot phase. During the pilot, the platform saved an estimated 200,000+ hours for team members by automating routine tasks such as document summarization, email drafting, and research compilation. The AI platform demonstrates CIBC's commitment to operational efficiency and innovation. Dave Gillespie, Executive Vice President, noted that CAI's adaptability across different business functions has had a positive impact across all lines of business. This technology investment is expected to enhance productivity and enable teams to focus on higher-value client activities. 2. Mass affluent and private wealth expansion. CIBC is strategically focused on growing its mass affluent and private wealth franchise across both Canada and the United States. The bank's Imperial service offering continues to show strong momentum, targeting clients with significant investable assets. In wealth management, CIBC reported strong performance with assets under administration, AUA, of $3.8 trillion and assets under management, AUM, of $376 billion as of April 30, 2025, compared to $3.3 trillion and $349 billion, respectively, in the previous year. The Canadian Commercial Banking and Wealth Management segment reported net income of $549 million for Q2 2025, up 13% from the prior year. 3. U.S. Commercial Banking Growth Strategy. CIBC's U.S. Commercial Banking and Wealth Management segment represents a significant growth opportunity. The bank has been expanding its commercial banking team across key U.S. markets and targeting compound annual revenue growth of 10% to 13% through 2025. The bank reported net income of $173 million, $122 million United States dollars, for its U.S. segment in Q2 2025, demonstrating the success of its expansion strategy. CIBC's approach focuses on middle market and mid-corporate clients across 6 key U.S. markets, leveraging industry expertise in its expanding presence. Risks to consider. While CIBC stock looks attractive, we should be mindful of potential risk. 1. Credit risk. CIBC faces potential loss if borrowers fail to repay their loans. The bank mitigates this risk through comprehensive credit risk management frameworks, including rigorous borrower assessments and ongoing monitoring. However, during economic downturns, the likelihood of loan defaults tends to rise, which can negatively affect CIBC's profitability. Despite strong risk controls, adverse economic conditions remain a significant factor influencing the bank's credit risk exposure. 2. Market and economic conditions. Market and economic conditions, such as downturns, recessions, or geopolitical instability, can significantly impact CIBC by reducing demand for financial services and increasing loan impairments. The bank's recent rise in provisioning for impaired loans highlights its sensitivity to these economic changes. Such conditions create uncertainty and pressure on profitability, as CIBC must prepare for potential credit losses while navigating fluctuating market dynamics and economic challenges. 3. Concentration risk. CIBC faces concentration risk due to its heavy exposure to the Canadian market, particularly through substantial mortgage loans in potentially overvalued housing markets like Vancouver and Toronto. This limited geographic and sector diversification makes the bank more vulnerable to a downturn or correction in the Canadian housing market. Such exposure could lead to increased loan defaults and financial losses, highlighting the importance of monitoring housing market trends for CIBC's risk management. Conclusion: Canadian Imperial Bank of Commerce (CM) offers a compelling blend of strong financial performance, attractive valuation, and consistent growth. With impressive year-over-year revenue and earnings growth, solid margins, and a reliable dividend yield, CM stands out as both a growth and value play. Its recent stock performance and favorable analyst outlook further support its investment appeal. Despite typical banking risks, CM's stability, profitability, and forward momentum make it a smart choice for long-term investors seeking dependable returns. But remember, this is not a financial advice. What do you think about CIBC? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching and see you in the next one.